Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of INDOSTAR Capital Finance, hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Piran Engineer from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Yeah, thanks, Margaret. Hi, everyone. Thank you for joining us and welcome to the call. With us today, we have the entire management team of INDOSTAR Capital Finance, led by Mr. R. Sridhar, Executive Vice Chairman and CEO. Without further ado, I would now like to hand over the call to management for opening remarks, followed by a Q&A session. Over to you, sir.
Thank you, Piran. Good morning to all of you and welcome to the call. The Q2 had been a stable quarter for us with some exceptional achievements. So I would like to take this opportunity to list out some of the positive developments which have happened during Q2. So all of you are aware that due to the pandemic, the lockdown started from March, and the Reserve Bank of India naturally came out and announced moratorium. So the moratorium 1.0 was very stiff, as you all know, because it was 100% lockdown. There was absolutely no economic activity, and our mainstay business of MSME, which includes commercial vehicles and SME, have not been able to operate. So all these have been the features of moratorium 1.0. So the collections during those months dipped, and many of our borrowers have sought moratorium. Subsequently, Reserve Bank came out and then extended the moratorium by another 3 months, which had been June, July, and August. So during this period, simultaneously, there has been an unlocking announced by central government and various state governments. Except in containment zones, economic activity slowly and gradually started. And we could feel that and realize as we have been getting better and better in terms of collections. So during these 3 months, collections have gradually improved, and we reached a 70% collection in the month of August. And moratorium did not got extended, and RBI came out and announced that they will allow a one-time reschedulement as demanded by the industry. So during this one-time reschedulement period in September and October, our collections went up steeply. And in the month of October, we have reached 100% collection. So if you look at our collections from March to October 2020, it has slowly moved up. In July, it was 65, August, it was 70, September, 92, and October, it is about 100%. So this has given us tremendous confidence and also exhibited the capability of our team, which are engaged in the retail businesses. Mind you, all these have been achieved with most of our employees working from home, and we initiated very aggressive customer connect program, and a terrific follow-up had been made. And customers, as and when the economic activity started, as you all know, the commercial vehicle is a earn and pay asset. So this clearly indicates, apart from other economic indicators like GST collection, toll road collection, diesel consumptions, and all that are indicating a positive turnaround in the commercial vehicle industry. So we observed in the marketplace different NBFCs adopted different strategies for commencement of business. So we felt that go and gain market share is one approach some NBFCs have adopted, and they felt that when there is no lender in the marketplace, it's a good time to go and gain market share. It's one approach. The other approach is a conservative approach which we have adopted, where you go through the uncertain period, wait for certainty, and then start the business. So in our case, in INDOSTAR, we felt that we should first achieve a 100% collection, which gives us the confidence to restart our businesses. So having achieved the 100% collections in October, we have restarted all the 3 retail businesses from November. So from November to March, we would be focusing to slowly and gradually ramp up our disbursements in all the 3 retail businesses. So the first message which I am giving you is the excellent collection performance during the most challenging period. The second most important is on account of resolution of non-performing loans. So as you all know, that we have acquired the CV financing business from India Infoline of around 3,500 to 4,000 crores in April 2019. So along with that asset, we also acquired around 300 crores of non-performing loans, which came along with this asset, and that had pushed up our gross NPLs to 4.5-5%. And subsequent to this acquisition, the commercial vehicle industry went through a down cycle. The GDP growth was sluggish, as well as the pandemic had put a lot of pressure on resolution of these NPL accounts. But we have been able to successfully sell this. See, I'm getting a lot of noise. Somebody is not putting the mobile on mute.
I'll just get that. I'll just get that checked.
Please put it on mute because I'm getting a lot of noise.
All right, sir. All are on mute except your line, sir.
Okay. So we have been able to execute a transaction in the month of September, where we have sold around 126 crores of non-performing loans to an IRC without any impact on the profit and loss account. So this has helped our gross NPL from 4.6, 4.7 to below 3% it had come. Also, in one NPL account which we had in the real estate, the customer has approached us for one-time settlement, and that account will also go out of our books on or before 31st of March. So these two are developments on the NPL front, apart from the excellent collection performance which we have reported. The third most important thing is on the reduction in the corporate book. We have been time and again mentioning to all of you that we would like to exit the corporate lending business, both real estate and non-real estate. And from a peak portfolio of 6,000 crores in the middle of 2018, we have brought it down to below 2,500 crores as of September 30th. And this has been brought down by sheer collection, and we have not done any transaction of sale of any of our portfolio assets. And in the Q2, we have been able to bring down 452 crores of exposure from one of our large client. So that has helped us bring down this asset. And we are confident that in the next 12 to 15 months, we would take this portfolio to near zero. So these are all few important developments which have taken place during Q2 with the partnership of Brookfield, which had invested money into the company with the kind of capital adequacy of nearly 35%. We have enough leg room, very comfortable asset liability, and a good liquidity pipeline enables us to plan aggressive asset growth in the next 5 months. During this financial year, due to the pandemic and other economic headwinds, when we are going through a muted growth, we are also not keeping quiet while focusing fundamentally on collections, asset quality, reduction of NPLs, selling of reduction of corporate lending book. We are also preparing ourselves to take advantage of the potential which is going to unfold post the pandemic. So what we did is we are focusing on few major initiatives to prepare the company to grow aggressively during the next 5 years. So we have focused on digitization. We have brought in a global consultant to help us, and we should be ready between March and June with a digitization initiative. That said, with the digitization, with the insight we have had during this lockdown, where we could achieve a lot of things by sitting at home, we also feel that our branches need not be big. So we are planning to have smart branches. When we are moving from 200 branches to 700, 800,000 branches in the next 5 years, all these incremental branches are going to be smart branches. The smart branches are smaller in size, combined with digitization. These two initiatives are going to enhance the productivity as well as reduce the operating expenses substantially. The net result of these two initiatives, apart from productivity increase and reduction of operating expenses, is the break-even. So whenever we are, as a small company, expanding to a bigger company, we have to open branches. So earlier, in our earlier expansion, when we opened 200 branches, these branches took nearly 18 to 20 months to break even. But now, because of this digitization and smart branches initiative, we are going to break even these branches into 9 to 10 months, which is typically 50% of the time. So this is going to increase our penetration in the different geographies. So that is going to help us in aggressive growth in the next 5 years. So when we are looking at with all these strengths, what we are trying to do is, apart from smart branches and digitization, we are going to expand our products. We are going to expand our customer segments. We are going to be 100% retail. We will be moving to different geographies. For example, we are today not present in East, so we will be moving there. We are also side by side strengthening the leadership team. You would have seen in the press release which we did on October 20th, we have brought in Deep Jaggi as our Chief Business Officer. Deep joins from HDB Finance, where he was head of asset financing. He had an impeccable track record in building the asset financing business, which consists of new and used vehicles, commercial vehicles, passenger vehicles, construction equipment, and tractors. So these are all the 4 segments INDOSTAR is also planning to grow. So Deep has worked the last 10 years in HDB Finance as asset financing head. He has built a high quality, high profitable platform. And before that, he was working in Chola. So he comes with a rich experience, excellent track record at an appropriate time to INDOSTAR, when INDOSTAR is sitting with a lot of strengths in terms of a large equity partner, equity capital, net worth, digitization, smart branches, and all that. So Deep's onboarding is going to help us in building the asset financing business profitably in the next 5 years. So we are, if you look at our Q2 accounts, you will find that the commercial vehicle finance business has made more profit than other businesses. This is what we have been telling all of you in the last few years, that the growth when it comes to retail business, particularly the CV financing business, where we are planning to be present in a high profit used vehicle financing, that is going to contribute significantly in the growth of our business. So the other point which I wanted to leave with you is on the restructuring. So during the months of September and October, where the one-time reschedulement has started, we have received only 0.6% of our customers have sought restructuring. We are evaluating that on a case-to-case basis, and wherever the customers have business has been disrupted, we are sympathetically considering reschedulement. So as anticipated, the reschedulement is not going to be a big number, which indicates clearly that the fundamental retail segments and the customer segments, asset segments are strong, and the customers are confident that they will be able to pay without resorting to any reschedulement. So the from November, as we get on to the growth path, we are also looking at the next 5 years commencing from April 2021, where I feel that the impact of COVID would have been substantially subsided. So from that time, the next 5 years we are looking at with a lot of confidence, and we are excited to build a high quality, high profitable, 100% retail company which would engage in the nation building activity. So with this preliminary remark, I leave the forum to the participants, and myself and the entire team of the entire top executive team would be happy to answer any of your questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akash Daptani from HDFC Securities. Please go ahead.
Yeah, hi. Good morning, and thank you for taking my questions. My first question is there has been a restatement in some metrics, particularly the GNPAs. So could you please provide some more color on that?
Yeah. Amol, can you take it?
Sure. Hi, Akash.
Hi.
The restatement, as you will see, Akash, is coming in from the previous slide. So on the balance sheet, you'll find that we have annotated that restatement is for loan assets and borrowings. So certain off-balance sheet items, which are a part of our securitized pool, which we had taken over, we have sort of brought them on balance sheet. Hence, you'll find that around 400 crores of assets have got added as on balance sheet, and a corresponding entries in borrowings as well. That leads to an impact in the GNPA in the range of around 20 to 30 bips, and that's what we have called out as restated. It's an accounting adjustment we have done in the quarter of Q2 of FY21, and obviously restated the previous quarters as well.
Right. But so even in absolute terms, your GNPAs would have appear to have changed. So would that be because of the same accounting adjustment?
It is only because of that accounting adjustment.
Okay.
Yeah.
My next question is on your other operating expenses during the quarter. Is there a one-off in there?
Yes, we had the same question last quarter as well. So here as well, we have called out that the cost-to-income ratio that we are publishing is excluding one-offs. And those one-offs are again for the investments that we are doing into various initiatives that Sridhar mentioned. And that amount will be in the range of around 10 to 11 crores.
Okay. So my next question is in terms of your plan for the corporate book. You intend to become a 100% retail-oriented company. So over what time period, would you look to run down the corporate book?
See, our corporate book has got a repayment schedule. But if you look at it, we have a waterfall mechanism in all the contracts. So as and when the developers sell apartments, we will get our money. So irrespective of reschedulement and moratorium, the money keeps coming in. And our projects are up to 3 crores apartment size. The sales have slowly started improving. So we are getting money back from the borrowers. So our estimate is that in the next 12 to 15 months, this would become zero.
Okay. My next question is on the collection efficiency metrics that you all have stated. Could you sort of break that up segment-wise if that's possible?
Segment-wise, we do not have here. We can give it to you separately.
Okay, sure. So I have a few more questions, but I'll possibly rejoin the queue.
Okay.
Okay, fine.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Kshitij Prasad from Maybank Securities. Please go ahead.
Hello.
Yeah.
So hi. We just released our note on INDOSTAR. My question is on two accounts. One is that how you seeing the trends in the real sector now? Is it the sale is happening, or is the liquidity crisis among developers still there to a large extent? And the second question is on the trends in the CV financing. Being a cyclical business, how you see that happening, and what's your strategy currently on that front? We have seen some kind of a contraction, obviously you being cautious, but do you see any kind of recovery, or what's the ground reality that's about? Yeah. Thank you.
Yeah. So I'll take your second question first.
Yes.
So when it comes to CV financing, as you rightly said, that it's a cyclical industry, and in the last more than 1 year, it has been down cycle. And along with the sluggish GDP, with pandemic, the new vehicle sales have bottomed out. But as you know, that we have defined our business as financing used vehicles. So used vehicles are not cyclical because it is not creating fresh capacity like new vehicles. We facilitate transfer of vehicle from one person to another. And in the CV industry, the fleet owners segment and the migrant laborers who have been using Uber, Ola kind of passenger commercial vehicles have been impacted badly. The remaining segments have been doing well. And we have been largely present in transportation of essential commodities like agricultural produce and other things which we consume on a daily basis, which are being transported in the state highways. So there is no sluggishness in this transportation as we require everything. We consume on a daily basis. Even during lockdown, we have been getting everything. So that is demonstrated by the gradual improvement in the collection efficiency also. So what we feel is, even in the base potential, we have got enough opportunity to gain market share, even though large companies like Shriram and Chola are present in this segment. They are going to be our main competitors. But without competing with anyone, by defining our own customer segment, we can gain market share with the kind of aspiration we have in this business. We have got enough potential. Apart from that, the scrappage policy, which is likely to be announced, is going to increase the potential for financing, because the scrappage policy, if it has to be successful, will have to have a very robust replacement financing. So we feel that these are going to be fantastic opportunities for us to grow in the next 5 years. Along with that, we also have geographical expansion, like going to different regions, as well as in the same regions, opening more branches. As I articulated, digitization and smart branches are going to be our focus area. Apart from that, we are also expanding the product. The product expansion is going to be on passenger vehicle, construction equipment, and farm equipments, including tractors. Since the rural market is doing very well, we will be getting into that space. And this product expansion, geographical expansion, all these are going to, along with the base potential and scrappage policy, is going to make our asset financing business a very high profitable, high growth business. When it comes to your question on the real estate, I would like my colleague Deepak Bakliwal to take it.
Yeah. Hi. So the initial trends on sales velocity are encouraging. You would see that predominant part of our book is Mumbai based, where there was a substantial reduction in stamp duty. And along with that, we saw renewed energy in the sector, which was required. Some of our sites we are seeing pre-COVID.
Welcome on to that.
In some of our sites, we are seeing pre-COVID level sales velocity already been achieved. Now, whether this has the legs to go to next 3 quarters, and whether it's not pent up and it will move to the coming quarters, is something which has to be seen. But the initial trends are encouraging.
Okay, thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is a follow-up from the line of Akash Datani from HDFC Securities. Please go ahead.
Yeah, hi. I have 2 questions. They're kind of related. So now the share of the promoter in the company stands at about 93%. Am I correct in understanding that this would have to be brought down by a significant amount in the near term?
Yes, definitely. Correct. Your understanding is correct. There is a 1-year time is given by SEBI.
Correct. So that being said, what are the plans that the company has in mind to sort of go ahead with that? And another related question. So you have mentioned in your investor presentation that you all would possibly be looking at inorganic growth as well. So which segment would you find most attractive, at this juncture? Thank you.
See, I can only say that we would like to remain as a listed company. So the compliance as far as the regulation will be done before the timelines. That's one. But how we will do it, that I will not be able to articulate as of today. There are multiple ways the same can be achieved. One of them, as you rightly said, is buying asset and merging with the company, where we have articulated that we are looking at opportunities which are there in the marketplace. So we have actively looking at opportunities in the same lines of business which we are already present, and also some of allied businesses. As of now, we are looking at it, and whenever something materializes, we will update.
Okay, that's it from mine. Thank you very much.
Thank you. The next question is from the line of Saurabh Kabra from Nippon Mutual Fund. Please go ahead.
Hello, sir. Very good afternoon.
Yeah.
So, sir, I have only three data points which we need. First is this collection update. When we say 99.7% and this the amount of collection, this would include only the current month collection or overdue as well as prepayments also?
See, we are talking about total collection as it has been claimed by the entire industry. Everybody is talking about the total collection only. So that is what we are doing. So we can always eliminate and see what is the billing collection. But normally in money lending business, the billing collection is always looked at the total collection only.
So this would include prepayments also?
Some prepayment, some overdue collections will be there.
Sure. And second question, sir, as you told that we have sold certain NPA portfolio of around 126 crore to an ARC.
Yeah.
Just want to check, was this sold for cash or against SRs?
No. Amol, would you like to take it?
Yeah. Hi. This was sold against SRs, where we also invested into the SRs of the trust, which is a standard practice in the industry.
Okay. But does investing into SRs allows the company to remove it from NPA? I'm just wanted to.
Of course. So what it does is that it clearly reduces my loan book, and the SRs are treated as an investment.
Okay.
Yeah.
And so one last point on the restructuring part. So we have a view on the retail piece. It is the number is quite good. On the wholesale side, can you throw some light that how much restructuring are we expecting on the wholesale portfolio?
See, there will be many cases which would go for moratorium as well as reschedulement, as I had mentioned to you earlier. But that's not material because our repayment is on the developers selling apartments. So it has nothing to do with your moratorium or reschedulement. But considering the industry and its headwinds, many people will go for reschedulement there. And that is the book which I had, as I had earlier told, that we are exiting, which could happen in the next 12 months.
Okay, sure. Thanks a lot, sir. No more questions from my side.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Amol Patil from IDFC First Bank. Please go ahead.
Hi, gentlemen. This is Amol from IDFC First Bank. I have a couple of questions. One is your OPEX has increased quarter on quarter 34%. Considering the COVID situation, people are negotiating with their landlords. They are having other means of cost control. I was hoping that the OPEX will go down.
Yeah. So the OPEX actually has come down compared to the expenses which you have outlined, that we have deferred our increments and bonus for employees. Employees have sacrificed. The second one is on the rental premises. All the branch offices, including our head office in Parel, are all on rental. We have renegotiated. The third is all the discretionary spending, including traveling during the pandemic, has come down. So as against our 300 crores of operating expenses incurred during FY20, we are expecting a 15 to 20% reduction, 240 to 250 crores only this year, FY21, on a like-to-like basis. That we have achieved. But what you should understand is that there are expenses which we are incurring for preparing our growth in the future. Like Amol said, there are one-off costs where we are bringing in consultants to help us in digitization. there are some other initiatives we are doing. And similarly, there are recruitments we have done for the future. Everything takes 3 months. We will be opening some branches. So these are all new additional expenses which are appearing there. But if you compare the earlier year expenses vis-a-vis the current year expenses, there is a 15 to 20% reduction.
Okay, my second question is around the securitization transaction. I would like to know what was the value of loans which were securitized, its breakup into retail and wholesale, and the value of SR which is hold on the balance sheet as of end of Q2.
Amol, can you take it?
Yeah. Hi, Amol.
Yeah.
We have sold a gross NPA of 161 crores. The whole NPA book is relating to CV assets only, predominantly the IIFL acquired portfolio that we had. The net amount of that gross NPA is 126 crores, and we have sold it at par to the acquiring ARC. We are carrying 107 crores of SR on our books as of 30th September.
So balance SR are held by the ARC, right?
That's the investor. Yeah.
Okay. Thanks.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Piran Engineer from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So when you mentioned about retail lending, our collection efficiency has reached 100%. Can you give a bifurcation across the 3 segments?
As of now, readily I do not have, but I'll share it with you offline.
Okay, sure. Sir, any indication of how many customers have not paid a single installment since April?
That also we will give you.
Okay, fair. Sir, my next question is for the CFO. Can you just briefly talk about our incremental sources of liquidity and incremental cost of funds?
Sure. Yeah. So you would have seen that since April we have raised around 1,000 crores plus. With that, the whole raising has been sub 9%, and where we see it settling as we speak for further funding opportunities is between 8.5 to 890. That's the range we are talking about. Piran, we have been very watchful about how much resources we are raising, considering we are setting out around 36% of our borrowings are available right now in liquid cash. So we have gone a bit slow. You will see in Q2 we have raised only 300 crores. And as we go ahead, as we pick up on disbursement, we will start increasing the funding pipeline. What we surely see as a positive outcome post Brookfield investment is that there's a lot of interest in the banking sector to lend to us, considering Brookfield is a co-promoter now. So in terms of funding pipeline available, very comfortable on the money inflow part.
Okay. And I guess this is all from banks or any of the government schemes also that have come out in April.
So NHB has lent money to us, and as we speak this month itself, another substantial 100 crore stake will come to us to NHB into our subsidiary. But beyond NHB and the earlier raising that we did from SIDBI, they are the 2 key agencies. NABARD has been a bit slow, and we have also not really pushed to do it considering the liquidity position that we have.
Understood. And I just had 2 clarifications because I didn't hear them correctly. One is that SR book is the SRs that we've got is 107 crores. Is it?
Yes, Piran. It is 107 crores.
Okay. And when sir spoke about branches breaking even earlier, not the smart branches, that was 12 to 18 months.
Earlier was 15 to 18 months. 15. Now it is 9 to 10 months.
Understood. Okay, sir. I'll get back in the queue. Thank you and all the best.
Okay.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Darpin Shah from HDFC Securities. Please go ahead.
Yeah. Thanks for the opportunity. So you have mentioned about collection efficiency in the retail business. Can you throw some light on the wholesale or the corporate as well?
Deepak?
Yeah. So bearing one account, which is in the gross NPA, there are a couple of accounts which are in the 30-day bucket. But we can take this offline. I can give you the exact data offline.
Okay, fair enough. And Amol, a question to you. If I look at the liquidity bit which you have mentioned in terms of inflows and services, so there I can see that we will be collecting somewhere around 1,050 odd crores in next 4 quarters or so, and then we're talking about reducing the corporate book materially again over the next 4 to 5 quarters. So how does this match? I'm not able to reconcile that. If you can help me.
Sure, Darpin. Hope you're well. So, Darpin, when we put out the strong liquidity position slide, clearly I am not in a position to forecast as to when the corporate book rundowns will happen and when the inflows will happen. What we have shown here as a principal repayment is the calendarized or the scheduled repayments that we expect. And we have taken certain assumptions in terms of being conservative, that in case of certain assets, if the inflow is only 50%, so we have built that into the inflow. So this is what you see here is the contractual inflow reduced to a certain extent as to with our view as to how the inflows will happen. So this doesn't incorporate any rundown that will happen due to prepayment or with us selling down the book. So this is only the business as usual scenario that is plotted there.
Okay, fair enough. And one last bit, we already have some 280-300 crores of COVID-related provisioning. Do you think we'll still require additional provisions to be done in the corporate book?
I missed that question, Darpin. Sorry, your voice was not clear.
Yes, sorry about it. So, we already have some 280-300 crores kind of a provisions for COVID.
Yes.
Do you think we will require more provisions in coming quarters, in next couple of quarters?
Right. So, where we stand...
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला...
Hello?
Yeah, I do.
Sorry for that. So where we see from here, we feel that the COVID provision we did in Q4 will stay for at least another 2 quarters. We don't see a major reason to top it up with a further overlay. What we will do is clearly that as we start untangling or seeing further sell downs within the corporate book or any challenges in the retail book, we will avoid tapping into the COVID provision and we use it as a last resort. We will try to build up our defenses to the current P&L itself.
Okay. Thanks a lot for this.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. Anyone who would like to ask a question, you may press star and 1. A reminder to all the participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Rakesh Shah, an individual investor. Please go ahead. Rakesh Shah, an individual investor, your line is in the talk mode. Please go ahead with your question. We would request you to unmute yourself from your handset and ask your question, please. Due to no response, we'll move to the next question. The next question is from the line of Abhishek Murarka from IIFL. Please go ahead.
Yeah, hi, good afternoon, everyone, and thanks for taking my question. So the question is a little qualitative and on the commercial vehicle book as such. And the question is really that, on the one side, we hear very high collection efficiency numbers in the commercial vehicle portfolio across the industry. And on the other, there are still reports of, truck or rather CV operators surrendering vehicles or, being out of business or leaving the industry. So how do we reconcile these two things? On the one hand, very high collection efficiency or vehicle utilization. On the other hand, people giving up their fleet or running down the size of their fleet?
Yeah, this can be easily reconciled. As I had earlier mentioned to you, that this is a total collection. So it's not a billing to billing collection. Every company has reported total collection. So to some extent, there is overdue, some extent there is prepayment and all that will be there. So that is one point. The second point is that there are few segments which have been impacted. Like I mentioned to you, fleet owners segment and migrant laborers who have been the majority users of passenger commercial vehicles like Uber and Ola have been impacted. All other people are not impacted. Slowly, as they come out of the lockdown, as they start using the vehicle, they start earning and every company is able to collect. That's it. So yeah, even if in this 100%, another 5-10% has come out of prepayment and overdue and all that, still you have more than 90% has come from the billing. So that's a good trend. So one side is the existing fleet is able to run vehicles and they are able to pay. But within that, companies which have exposure to fleet owners and this kind of migrant labor will have an impact.
So in the overall scheme of things, all this passenger vehicles, Uber, Ola, all of this would be hardly 3 to 5%. But the bigger problem area is really the commercial vehicle fleet owner.
Yeah, fleet owner is impacted.
Yeah. So there, on an industry basis, just broadly, what would be your guess on what is going to be the ultimate, let's say, delinquency or people going out of business? Would it be like 5% of trucks would have to be given up or repossessed, or maybe 10% of trucks, MNHCVs? What is your sense?
No, I don't have a number, but what is happening is that these fleet owners who have got 80, 100 vehicles,
yeah,
each have been funded by large banks and companies.
Right.
So I don't want to name them, but they have all given money at sub 10% in single digit to these fleet owners.
Sure.
And more than 100% funding also has been given. So in good days you do that, and when the vehicles feel the pressure, then what happened is all these people have sought moratorium, and subsequently they are also seeking reschedulement now. And more than that, mind you, many banks and large NBFCs have given them the 20% ECGL also.
Right. Okay.
Which had helped them in payment of insurance and kickstarting the business and all. The problem is that enough load is not there in the industrial production which these big guys transport, which are happening on the national highway. They are also facing driver shortage. They are also facing the problem of diesel price increase. They are also facing the problem of loading, unloading people not there because all migrants have gone. So multiple challenges these people face, but mainly on account of lack of industrial production. So till it comes up, there will be pressure on these customers, but they will be appropriately rescheduled so that their installment amount comes down and they are able to manage. So this is there could be some amount of loss will come.
Yeah.
But since the fleet owners are people who have got this CIBIL and all that to be properly kept to keep the credit track record. So there could be some losses which the banks and NBFCs will have to take, but it is difficult to estimate it at this point of time.
Okay. And so just a last quick follow-up here. So would you say that this 90-95% kind of collection efficiency, which of course includes arrears also, where would the clean number be for the industry? Would it be around 80-85 and or maybe even lower?
Yeah, definitely it will be more than 80%.
Okay, so maybe low 80s or 80-85. That should be a clean collection efficiency.
Yeah, definitely.
Okay.
That's a good number in current environment.
Okay. Right, sir. Thanks.
Thank you.
Thanks for that.
Thank you. The next question is from the line of Vijay Jacob, an individual investor. Please go ahead.
Hi, could you help me understand the fall in NPA in the vehicle finance business in this quarter? Maybe it was covered earlier, but I missed it.
Okay. We informed that we have made a ARC transaction where we have sold about 126 crores of NPL at par without any P&L impact. That is why it has come down substantially.
Understood. And this pertains to your book or the IFL CV book?
It's a combination, but majority IFL book.
Understood. Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you to all of you for joining the Q2 call very enthusiastically. As I had articulated that we are in good shape and we are well prepared from both the liabilities as well as asset side, including the senior management business teams. We are well prepared and excited with an outlook for excellent growth, profitable growth for the next 5 years. We look forward to interact with you, update all of you on the developments every quarter, and look forward to your support. Thank you very much.
Thank you. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your line.